Hi there, welcome to Kneppy Invest and welcome to May 5, 2025. Time is 3:02 p.m. So with about 1 hour and 8 minutes left of trading today. And I can't believe I missed May the 4th be with you yesterday. Completely missed it. Although I wouldn't say I'm the biggest Star Wars fan, so I wouldn't be the sort of person who would notice that. But I did see a video. Someone put their reaction to every single Star Wars movie online or something like that. And they released it for May the 4th, and that's when I realized, that's right. Anyway, interesting day we have had on the ASX today. In fact, if we go have a look at the market index, a negative day, I do believe and would assume, and we'll see if my assumptions are right, the reason we have seen a negative day is because of energy. OPEC have increased their production of oil or something like that. And also Westpac released their half-year results, and I would say they were disappointing. So I wouldn't be surprised to see financial market down a fair bit today. Also energy's down. So we'll see if that is right in a moment or two. Now, the agenda of today's video, a few interesting things to talk about. First of all, so that is the earnings released calendar via Trading View. I am looking for how I screen for companies that are at a 6-month high. Haven't found it yet, but I did find something really interesting. I'll talk about that. Also, the Macquarie Conference is this week. Yes, and the reason I discovered this was Matthew Kidman on a podcast mentioned it, and then I noticed that I think it was Reliance Worldwide Corporation released a presentation in regards to the conference, even though the conference doesn't start tomorrow. And I was trying to get a list of companies that are featured at the conference, but I couldn't get it. But I will show you an interesting little article they did release, Macquarie released on last year's Macquarie Conference. And then we'll have a look at the ASX today, have a look at the best and worst performing sectors, indices, and also companies. And also we'll have a look at the top 5 stocks of the day. Quite a few companies didn't make it. In fact, I've left one out, which I didn't even notice. That's Endeavour. I might briefly mention that company. And then we'll have a look at one of your comments. The one comment I do want to speak about was in regards to taxes on unrealized gains, which in my opinion is an absolutely horrible thing. So we'll have a look at that comment as well. Now, you might notice, or you might not, I'm not sure if it's noticeable, but I'm recording from my iMacs webcam. Now, my old webcam on my other iMac I could not use, but I'm just testing this one out. So if there's any differences or anything like that, the one thing you probably won't notice is my microphone's right in front of my face. Yeah, you can just see the bottom of it. Yeah, there it is. There it is, or the top of it, not the bottom, the top. So that's really good. I can actually put the microphone right in front because I do have this other webcam. I just put in front of the computer screen. Sometimes it blocks me from what I can see. And this, I can't, nothing's blocking. So see how this works. Hopefully it's fine. Okay, first thing, yeah. Not sure what I was going to say there. First of all, probably that's what I wanted to say, but it went nowhere. Onto stock screener Trading View. And I just want to point out something really interesting in regards to earnings release. And I noticed this, not in the US, you can change the market. Unfortunately, you have to click other markets and go all the way down to Australia. Notice Djibouti is not here, which is a disgrace. Maybe we could go to Bangladesh. But let's go to Australia. And what I'm going to do is we're going to have a look at all the releases. So last week, so recent earnings date, previous week, so Block, Amcor, Capstone Copper, Anika, Tambang, Coronado Global, Plenty Group, Renogen. So not a lot last week. But the one thing I noticed when I looked at this last night, and what we'll do is the next 5 days, it spits out NAB, ANZ, Macquarie, News Corp, Light & Wonder, Orica, Avita Medical, Piedmont Lithium, Laramide Resources, and we won't go down the others. So according to this, we do have some significant releases, earnings releases this week. Now, I've already seen Westpac release theirs, so maybe that's why it's not showing up here, but some other interesting companies as well, including Macquarie Group, News Corp, Light & Wonder, and Avita Medical. So this is a new thing I have discovered, but I'm still looking for a screener where I can find companies whose share price is at a 6-month high or anything like that. I just can't find it yet. I'm not the biggest fan of this screener or this screener page. It's okay. It's okay. But the problem I have is like revenue growth. It's only like last 12 months or the previous year. Yeah, I really want to look at least 3, 5, or 10 years when it comes to revenue growth or even earnings per share growth. And there's none of that option. Okay, so that's that. Also, the Macquarie Conference. Here it is. Here's their webpage. 2025 Macquarie Australia Conference. Didn't realize how big this was. The 27th Macquarie Australia Conference, held from tomorrow, 6th of May, to Thursday, 8th of May, is the largest annual gathering of Australian and New Zealand companies with both domestic and international institutional investors. Over 3 days, the flagship conference attracts more than 800 institutional investors, and this year features a record number of presentations from corporates covering macro trends driving business activity in the year ahead. Now, they don't have a list of companies, which I found interesting, but, and I think there is a reason behind that. If you have a look at their last year's report, so they did release a report, I found this really interesting. So let's just zoom in. Because this could be considered an important conference because companies will release trading updates. In fact, they do mention trading updates were rare. So while guidance changes were rare, there were more upgrades than downgrades. And the average stock outperformed 0.4%, even with the retail sell-off. So this was sometime last year. Was this a net upside conference? Yes, we had guidance increases from AGL, HMC, AUB, and MPL. GMG did not attend, but also raised guidance. In terms of guidance reductions, there was SGM, DHG, so Sims Metal, Domain, while some trading updates looked better. Polynovo, PNI, which is Pinnacle, and REG, which is Regenis, or worse than expected, Index, JB Hi-Fi, and Super Retail. Retail, the negative surprise, AI, action and recommendation. Yeah, so nice little read here. Key takeaways from by sector, real estate. So the first one was financial. So nice read here in regards to what happened during this conference. Best and worst relative returns on presentation day, which is interesting in itself. So some company share price did go up a fair bit or down. Like JB Hi-Fi was a worse performer, down 3.5%. And so heaps of companies. This is probably why they don't have a list this year, because there are so many companies. Oh, by the way, Temple Webster went down 16.8%. Oh, okay. So that's the first bit of companies is ASX 100. And then the second lot of companies is X100 companies. So Temple Webster had a bad day last year. Chance Mining had a good day. Polynova had a good day. Okay, so that's happening within the next few days. And we probably will see a lot of presentations being released. And we saw the first one today from Reliance Worldwide Corporation. And by the way, that company's in my top 5 stocks of the day. Yes, it is. Absolutely. Not because it was an upgrade or downgrade. It's just because of their commentary, which was absolutely fascinating. And that's one of the reasons why I found today really interesting, particularly the announcements, a lot of trading updates and a lot of talk on tariffs and how tariffs are going to affect these particular companies. So let's turn our attention to the ASX 2-day, a negative day. In fact, I might just zoom in. I think because I'm using a new computer, I'm not as zoomed in. Is that too zoomed in? We can go at 175%. Yeah, we've got all the, so, not a good day. Everything's down. Not surprising. I'll say this, not surprising. We've had a really good run the last few weeks, and I do think the markets are a little bit overbought. And on top of that, we did see Westpac release disappointing results. So because Westpac released disappointing results, I wouldn't be shocked to see most of the major banks down by a fair bit today. So I wouldn't be surprised to see Westpac down maybe 2 to 4% and the other banks down between 0.5 and 1.5%. I'm just guessing. Anyway, so, oh, geez, have a look at that. Really didn't expect that. We've seen drifting down in all the indices through the day, particularly tech. Tech was up at the start of the day and drift off. I wonder if this has something to do with US futures. Let's have a look. We can have a look at that right now. Oh, yes, American futures are down. But again, just because American futures are down doesn't mean they're going to have a negative day. We've seen this a lot over the last few weeks. Futures down, then the market has a really good day, or futures up, and then the market has a bad day. But that's probably another reason why our market is a little bit lower today, because American futures are dropping. Okay, let's have a look at the best and worst performing sectors. So I'm thinking energy and financials down a fair bit today, and the rest, I have no idea. Okay, well, there you go. So energy down 3.24%. That's on the back of OPEC increasing production. In fact, I'm just going to have a look at an article. It's really good. I've got my second monitor to the right on my new monitor. So I've got stuff on there. Got two screens now. It's amazing. So when I do, in my professional job at the Bureau of Meteorology, I have 4 screens when I do a shift. But you need 4 screens in that sort of situation. And I don't see anything here. Oh, you know what it was? It was trading economics. I can show you that. Trading economics pointed me in the right direction. Oh, where is it? Here it is. Oil falls as OPEC confirms output boosts. Apparently this is sort of like retaliation. Where did they say it? The move aimed at punishing members exceeding quotas. So some members are being bad boys or girls. I wonder who that is. Who is a member of OPEC? So we know it's got to be Saudi Arabia, Russia. Is Venezuela in OPEC? Member countries? Kuwait, Iraq, Iran. Members of OPEC. Members. Just wondering if Venezuela is. Where is it? Where's the members? I don't see where the members are. Where is it? Here it is. Maybe this is it. That's OPEC fund. Is it the same thing? I have no idea. Well, there's a link there to go to all the members, and it just doesn't go to that link. Where's AI? Where's AI? Ah, so annoying. What are OPEC countries? Let's have a look. No. Maybe I need to say countries. Maybe I'll just do a list here. I'll do a Wikipedia. I just want to know who. So here we go. Here we go. Current members: Algeria, Republic of Congo. So these are some countries I wouldn't have guessed. Iran, Iraq, yeah, Kuwait. Yep, that makes sense. Libya, Nigeria, Saudi Arabia, UAE, and Venezuela is in that. Russia's not. Okay, I thought Russia was. OPEC plus. Okay, so they're in the OPEC plus. Okay, so I wonder who's being a bad boy or girl. I wonder if it's Venezuela. Anyway, so that's the reason why energy's had a really bad day. Financials, Westpac, disappointing results. Otherwise, we've also seen a pretty negative day from telecommunications, real estate, I suppose IT materials as well, and a positive day from healthcare and industrials. Utility staples, relatively flat. Pretty good day for gold as well. Happy with that. And everything else is down. Let's have a look at the ASX 20, which is actually down 1.17%. So if you're heavily invested in ASX 20 companies, and more than likely, if you're heavily invested in ASX 20 companies, you're heavily invested in the top 4 banks, you probably had a bad day. So I'm assuming that the 4 major banks are down a fair bit. So let's have a look. Let's have a look by market cap, in fact. And there we go. CBA down 2%. So a little bit more than what I might have thought. BHP down, CSL up, Westpac down 2.78%. I thought maybe a little bit more than that. NAB down 2.19%, and ANZ, which by the way was up on open, down 0.99%. I found when ANZ did open, because I saw Westpac release their results, I thought, oh, it's negative, so that should affect the other banks. And then ANZ opened up high. I was like, why would you do that? And in fact, quite a few of these companies were up on open, like Macquarie Group was up, but some of these were not up. Okay, any companies up? Let's have a look. Brambles, CSL, Coles, WiseTech, Transurban, not Woolworths. Interesting. Now let's have a look at the top gainers and top losers. This is where it might become interesting because I haven't really had a look at this. A lot of times I will have a look at this, but not today. Oh, Xpon Technologies up 333.33%. Now, it's on a low base because the share price is now 2.6 cents. So looks like the share price was 9.9 cents. I actually did see this and I just thought to myself, nah, I'll go move on. So let's have a look at Xpon. I can't remember what it was. Oops, I can use mine. See if it does it. No, it's not doing it. Oh, there we go. So the keyboard has a touch thing on it. So sometimes I can just put my finger on the keyboard and that's my password. I do like that. Anyway, Xpon, only up 300%. It's going to be fairly volatile. By the way, the share price opened at 1.1 cent, closed at 0.6 cents. So yeah, so it did open up a fair bit and as high as 3 cents. So a lot of day traders would be in this. So I'll just zoom in as well. Here we go. Zoom in. There we go. What was it? Xpon acquires Alpha Digital to accelerate AI-powered growth. Not the sort of announcement that would get me interested in a company. It's no financials to this. It could be a successful acquisition. It could be unsuccessful. I just don't know. So even though the market has reacted pretty well to this, it could go either way from here. I have seen share prices of companies go up 300% on the back of this sort of thing and nothing happens in the future to that company. So I might have a closer look at the investor presentation when I stop recording this video. But if you have a look at the chart, Xpon is just going nowhere. At this, well, even after today, share price is well down from when it listed. Yeah, well down from when it listed. I mean, this could be a breakout based off the chart. And look at the volume. Massive volume coming in. So maybe I'm being a little bit unfair on Xpon because this does look like a potential breakout, but we have seen a bit of selling coming in. Share price now down 2.4 cents. So I wouldn't be surprised to see a bit of selling continue during the rest of today into the next few days. But yeah, let's open up this media release. There won't be any numbers here, I doubt it. Well, there is numbers. Alpha Digital generated 4.6 million revenue, $0.7 million in EBITDA. Well, that's interesting that this company is EBITDA profitable. Xpon's not. And how much do they have to pay? 1.72 million at completion, 180,000 Xpon shares on closing, and 1.54 vendor loan at 8% per annum over 3 years. Additional 891,000 in performance-based 2-year earning linked to EBITDA growth targets. Seems like it's a fairly cheap acquisition. Yeah, it seems really cheap. So maybe I'm being a little bit unfair on Xpon. Anyway, I can't tell you what this company does, except something to do with AI. Let's have a look at the most recent Appendix 4C. Let's do that. Yeah, why not? And let's just have a look. Cash receipts, 801,000. Operating cash flow negative, 1.544 million. But the year to date, interesting enough, they were operating cash flow positive for the year to date. So it looks like this company's cash receipts are quite lumpy. In fact, $7.9 million of cash receipts for the first 9 months. Maybe there was a one-off in there or something. But with cash receipts only 801,000 for the quarter, I'd like to see that level off or try to understand why cash receipts were so low for this particular quarter. Maybe they mentioned that in the commentary. Let's have a look at the commentary. Revenue of 2.1 million. So there was a fair bit of revenue. So a lot of times you'll see a discrepancy between the revenue and the receipts just because of timing. They do mention here, in line with previous guidance regarding softer top-line revenue. And I just want to see if they mention cash receipts. Look at that revenue as well. Revenue by quarter. Nice growth up until a few years ago and just gone sideways ever since then. And cash flow. Well, that's completely different. Oh, no, that's net cash outflows. Receipts, 0.8 million. The amount was lower than the prior quarter, primarily due to the reduction of the aged payable. I have no idea what that means. But anyway, so let's move on to the next company. And anything else here I want to look at? Not really. Might just have a quick look at Pan-Continental Energy because the share price is up a fair bit, but the volume is fairly low, it seems like. I'd say, yeah, nothing. So we can move on. Nothing. I'm just looking for some nice volume as well. Now, SmartPay, there is an acquisition there's a takeover bid for that company. Tyro Payments, there was a takeover bid, I'm pretty sure from Tyro Payments. They've withdrawn it because another takeover bid has come in at a higher price, something like $1.20, I believe. Let me have a quick look. SmartPay. Here it is. They released this on Friday evening, and the takeover bid is at $1.20 New Zealand. So that's like 5 cents Australian. I'm kidding. It's $1.12 Australian. So if you do believe this takeover bid will get through, there's a bit of what do you call it? A bit of arbitrage there, maybe. Maybe. So I saw this Tyro withdraws the acquisition. I thought, oh, share price of SmartPay is going to drop a lot. And then I saw that other announcement released on Friday evening. So that's why SmartPay's up. And that's about it. Oh, Zero Resources, share price up 16.33%. They had an issue with production. I forget exactly what, but Balamar site access restored. Was it some sort of protest, something like that? So it looks like that's all been solved. Yeah, advises that the protest actions at its Balamar graphite operation in Mozambique have been cleared and access to Balamar site have been restored. I'm not sure if I'd be buying Zero Resources on that news simply because the company's well from being profitable or cash flow positive, but I do think the chart is interesting because share price has been going sideways for about 8-9 months. Okay, let's have a look at top gainers by market cap. Gold Road, wasn't there some sort of acquisition or takeover bid for Gold Road? Pretty sure that's what I read somewhere. Scheme implementation entered into with Gold Fields. Yeah, okay, so that's why gold's up. Pete, I actually did mention Pete last week. Tyro Payments withdrew their takeover bid. That's why their share price is up. Immutep did release something today, I believe. IMM. And I just moved on. I saw it and I just moved on. So excellent overall survival in head and neck cancer patient. That actually does sound pretty good. So let's just have a look at Immutep's share price and chart. Oh, no, I don't like that one. Yeah, let's look at the chart for that. A few other companies up nicely like Apiam, but yeah, share price is all over the place with that one. No interest otherwise here. Hazer Group. Hazer Group is in my top 5. I was thinking of just leaving it out, but I might just keep it there. I missed Endeavour Group, so I was thinking of pushing out Hazer for it. Now I'm gonna talk about Endeavour. Oh no, I'll just talk about Hazer here. So Hazer did get into what was it? It was Hazer and KBR signed deal for global licensing and commercialization. This sort of does remind me of sort of like a pharmaceutical deal. There's no real big numbers with this at this point in time. Hazer is still a bit of a story stock. So capital light licensing model maintained. KBR 3 million work program contribution preserves Hazer's robust funding position. So I'm not sure how successful this will be, but definitely a company that is on my radar, but I just need a little bit more, I suppose, I need a little bit more proof of their business model, which means I need to see this company selling a lot of product or bringing in a lot of revenue, cash receipts, that sort of thing. Now, the chart does look sort of interesting. So this is primed, I believe, for a breakout. You could almost say this is nearly a breakout share price at a 3-month high. So yeah, chart is actually looking pretty interesting for Hazer Group. Okay, now let's have a look at the top losers for today. And we have nothing much. Dateline Resources. Wasn't the share price of this company up a lot the other day? Let's have a look. The TIG code. Oh, that's right. US presidential recognition. Okay. So the share price was up a fair bit, 200%. Now we've seen a little bit of selling. Look at the volume. 390 million shares traded on Friday, 177 million shares traded today. I would say there is a lot of day traders in this, so I'm not keen. Now, in saying that, when you see the share price rise 200% one day and then drop 18.5% the next day, there is a chance the share price could have a nice little rebound tomorrow. If it doesn't, I think the share price will keep on falling. The other thing to note is if you have a look at trade history, the share price is so volatile from one day to the next, although in saying that, the share price was below 1 cent, which is a massive red flag for me. Anything else here? Playside Studios, not surprised there. The co-founder has gone. He's resigned or something. Yeah, resignation of co-founder. So not surprising, share price has dropped onto this. And Playside Studios has been a very disappointing company recently. Share price has dropped a fair bit. I'd say maybe 90%. And look at that downtrend. Share price in May last year was as high as $1.10 on the 28th of May. So within the last year, the share price has gone from $1.10 to 13.5 cents. That's the definition of disappointing. And we've seen quite a few disappointing announcements from the company, 23rd of October and the 29th of January. And what else? That's about it. So let's have a look at top losers by market cap. Stanmore, SiteMinder, Nuix. I'm looking for, Crisis Corporation did release a trading update. So I'll talk about that now. Crisis Corporation, I hope I'm saying that right. Crisis Corporation, maybe. May 2025 trading update. I was trading this company in a different sense about a year ago or over a year ago. And I'll show you the chart in a second. It's pretty obvious when I sold out. But anyway, trading update. 5% increase revenue quarter on quarter, 25% increase year on year. This is a capital heavy company, which is one main concern about it because they do sell this massive equipment, photo assay unit or something. It does cost a lot, so they do have to spend a lot of money to produce these photon assay units. Currently deploying 5 photon assay units, including deployment of the 3rd unit in support of Barrick's Nevada gold mine operations. So deploy units 35 and yeah, $16.2 million of revenue. Nothing in regards to cash receipts. Looks like this company did not release an Appendix 4C. Yeah, they did not. And they'll also release a presentation today. Yeah, there we go. Cessation of quarterly reporting obligations, which is interesting. I would have preferred if this company kept on releasing their quarterly report. It's disappointing. Anyway, let's have a look at the chart for Crisis. I didn't know what to make of that report, so I have no expectations, but the share price is in a downtrend. It's been a downtrend for a while. You can definitely see a really beautiful uptrend from early 2023 all the way through to late 2023. So 2023 was really good for this company, and I was in this trade, and then the share price just dropped. It just dropped. You see share price dropped a fair bit in January 2024. I found a little bit of support, but I was out during this period here. And share price has gone down a fair bit from there. In fact, it's almost halved from there. Okay, what else do we have here? Doug Technology was up nicely last week, down today, so a bit of profit taking there. Apiam Animal Health. No, that's in my top 5, so we can move on. Okay, let's go to the top 5 stocks of the day. Before we do that, I'm just going to mention a few interesting announcements. I did take out Hazer during this video, and I do have a choice between Gale Pacific, Motio, and Endeavour Group. I'm going to put Endeavour Group just because it's a bigger company. So which means I will briefly chat about Gale Pacific. Share price down 3% on a trading update. Some interesting commentary in regards to tariffs and what they're doing to counter tariffs. So US market, Q4 trading in the US is expected to be impacted by reduced consumer demand through our retail partners. So this reduced consumer demand is a common theme among many of the trading updates today. So we are seeing a significant weakness in USA consumers, and that is not good for their economy. Existing US inventory is not affected by tariffs. US retail partners adopting a cautious approach to replenishing inventory. Tariff-related price negotiations with US customers are ongoing. They revised their full-year guidance for EBITDA is now between 10 and 12 million. So I'm not sure if that's a little bit lower or about the same. With the share price down not that much, I'm assuming it's not a surprise to the market. No interest in this company, by the way. So let's have a look at the chart. And I don't think the chart's going to be any good either. With the share price down below 10 cents, yeah. I remember looking at this company many, many years ago. Yeah, I was going to say it was much higher than this. And this is probably why I haven't looked at this chart for a while. It's been a downtrend for a long time. And the share price just keeps on dropping. So no interest in Gale Pacific. I'm trying to remember what they do. Shading products. Yeah, I was going to say sales, but that didn't seem right. Branded screening and shading products for domestic, commercial, and industrial applications. Yeah, for some reason I was going to say sales, but I didn't think that was right. And the other one was a very little company called Motio. I think I've talked about this company once or twice before. You can see the share price up 11.76%. This probably should be in the top 5 stocks of the day because share price up 11.676%, and they released an upgrade. This is a perfectly titled announcement because I know exactly what it is without even opening up the announcement. Upgrade to guidance for financial year 25. There's no shock here. I know exactly what it's going to be. If I was a shareholder, I'd be like, "Ooh, this is an exciting announcement," and you look forward to opening it up. And I think bigger companies should take note of Motio. I'm trying to remember what this company does. Is it advertising or something like that? I think it's advertising. It's sort of like, could be completely wrong, but it's sort of like O Media, but maybe nowhere near that big. Anyway, so upgrade, so revenue upgrade. It's a very small upgrade. We're talking about $100,000 in terms of revenue. Cash EBITDA upgrade from 1.2 million to 1.35 million. And not sure if cash in bank is an upgrade, but I don't think anyone's going to guide for that. And net amount owed to OML. There you go. I'm pretty sure that's Media. And I'm pretty sure this company is something to do with like advertising. Anyway, let's have a look at the chart for Motio, MXO. This is a small company. I would say the market cap might be 20 to 40 million in that range. No, nowhere near. It's only 10.58 million. This company's profitable, by the way. It's EBITDA profitable. 10.58. So maybe there's some good value with this one. Maybe I should take a closer look. Let's have a look at the chart. Interesting chart. I think the share price has found a floor, and this one wants to break out. I'm saying it right now. The chart of this one looks like it wants to break out. If the share price gets above 4.5 cents, breakout alert. I would like to see some higher volume coming in. We did see some pretty good volume back in July of last year. That was a good sign. But we haven't seen a return to nice volume coming in. Even today, volume hasn't been that high. Let's have a look. How much is traded? Only 14 trades today, so that's fairly weak. And by the way, if you have a look at the share price, the next trade, the share price could go back down to 3.4 cents. Just need one person selling, and that's it. Share price has been as high as 4.1. Okay, now let's have a look at the top 5 stocks of the day. And since I did put Endeavour in at the last second, let's have a look at this company. Share price is flat. Wow, flat. Maybe I shouldn't have. Anyway, they did release a trading update. I missed this one, by the way. So on occasion, I will miss a price-sensitive announcement, even though they put the words trading update in it. I don't know how. In fact, I'm going to have a look at my other screen. There is a chance that this wasn't in ComSec's list. So I'm going to go, it was. In fact, there was another trading update from a company called Boom Logistics just above it, and I missed that one as well. So for some reason, I missed this section of announcements. I'm going to have a look at Boom Logistics trading update. Share price is down, by the way, for that company. So Obviously, that was not a positive trading update, but that was another one I missed. Let's have a look at this. Boom Logistics. Sorry, I'm looking off screen. Yeah, there's nothing. It's just they just put out their expectations of revenue, EBITDA. In fact, I can do it right now. Yeah, let's do it. BOL, Boom Logistics, share price down 4.58%. Yeah, I missed this one as well. So sometimes I miss it. Sometimes I miss these sort of announcements, even though they're my favorite type of announcement. So revenue, yeah, nice little increase in revenue. EBITDA is up a fair bit. Profit up nicely as well. Net debt. In fact, if I saw this without knowing the share price was down, I would probably have thought this was pretty good. Now, they might have had some negative commentary in it. They reconfirmed guidance. Typically when that no, this quarter's result was possible because we continued to execute against our strategic initiatives. So this seems like it was a pretty good quarter, an update from Boom Logistics, but share price is down. Share price is down. That's interesting. Sometimes the market does the complete opposite to what I think it might do. Chart doesn't look that bad. It doesn't look that good either. And I'll move on. Okay, let's go to Endeavour. Coming in number 5, they did release a trading update today. Share price was up a little bit, but has pulled back. And I had a quick look at this when I did see they had released a trading update because I missed it and I'm interested in it. Retail sales down 3.1%. Hotels booming. Well, maybe not booming is the right word, but hotel sales up 5.1%. Solid, they've quartered Easter sales in quarter 4 following subdued retail trading in third quarter. I would say even retail trading in this quarter is subdued, although this is the third quarter. Yeah, this is the third quarter. Okay, this is the third quarter. Sorry. I was going to say retail sales in this quarter looks pretty bad, but this is talking about the fourth quarter as well. So they must have done something there, some sort of trading update here. Here we go, fourth quarter trading update. The company delivered positive sales growth in April, which followed improving sales trends in March. So are more people going to hotels, that sort of thing? In retail, we achieved an Easter sales result in line with Easter sales in the previous year. So not much growth there. And in hotels, we continue to see good growth across all drivers, which is interesting because I thought maybe people would be pulling back from that sort of thing, but obviously not. Promotional intensity in retail increased at the beginning of fourth quarter ahead of the key Easter and Anzac Day holiday trading period. Looking ahead, the group expects retail market conditions to gradually improve as inflation moderates and the prospects for interest rate cuts increase. I'm going to say this. I think interest rates should stay where they are for now. Because the worst thing the Reserve Bank could do would be to decrease interest rates and then increase them again not long after. I think that would be the worst thing to do. Anyway, so it does make sense. If you do think interest rates would decrease, then spending would increase, but then inflation could go higher. So in fact, what they're saying is, maybe we'll see inflation go higher. By the way, inflation is now sort of in their ballpark and the higher end of the ballpark. But if you do have a look at the last quarter, things are starting to go up again. So yeah, so I think even though the market is expecting interest rates cuts, I wouldn't be surprised, absolutely surprised if they don't, if they are concerned about what happened in the last quarter. So that's Endeavour Group. The chart has not looked good for a long, long time. I still remember when this spun out of Woolworths, people were so excited about it. Share price is, I think, still in a downtrend. Has been a downtrend for almost 3 years. Share price 3 years ago was almost 820. So share price is halved. So maybe there is an argument that Endeavour Group is starting to look good value. Let's go have a quick look. P ratio 16.23, dividend yield 4.81%. I wouldn't expect much growth in this company, but anyway. So that's Endeavour Group. Coming in number 5. Coming in number 4, we're going to speak about Apiam Animal Health. Share price down 9.3%. Maybe this should be a little bit higher. They did provide an investor update. I would have preferred this to be a trading update, but whatever. It's an investor update. A lot of information on the one page they did release. I was more interested in this little table. How is the company performing? Because they put a lot of numbers here, and I like numbers. So not much increase in revenue, not much increase in gross profit. In fact, that's almost flat. EBITDA, slight decrease there, and PATA decrease there. In fact, a fairly big decrease there by 9.4%. In fact, versus the previous corresponding period for the first half, down 15.5%. So not surprised the share price is down, because I was a little bit not the biggest fan of this particular update from the company. But in saying that, the share price I'm pretty sure they must have released some sort of update, because I remember the share price dropping a fair bit a few weeks ago, or maybe a few months ago. Maybe it was the impairment of underperforming New South Wales, or maybe it was the results. Let's have a look at the chart. Or maybe I'm thinking of November, but I'm pretty sure the share price dropped a fair bit. Yeah, it was the results. Yeah, share price on that day dropped 6%. Anyway, the chart was looking good for Apiam Animal Health. By the way, this company is profitable, and it's not that expensive. Last time I looked, it was like, it's fine. P ratio, well, 860, but yeah, sometimes you can't look at P ratio. So nice growth in revenue. So in 2024, they had a profit of $5 million, and the current market cap is $79 million. So it's not overly expensive. $79 million market cap, $5 million profit. Don't know the dead, but I wouldn't say closely following this company, but when the share price was in this uptrend up until late last year, I was paying attention. But at this point in time, the chart looks a big meh from me. Anyway, animal health, Apiam Animal Health down 9.3%. Now on to company coming in number 3, we have Chic. Share price down 5.95%. Okay. US tariff and trading update. So this is one of the really interesting announcements, I think, because we do get a fair bit of insight what's happening, what companies are thinking about. And this was really involved, a lot of commentary here. I don't know if I can go all the way through it, but they do mention, 20% of the group's revenue is generated in the USA, and over 90% of the group's products are sourced from China. But they anticipated this. They anticipated the tariffs, and they did successfully bring the bulk of its 2025 summer age and a substantial portion of its winter 2026 product into the USA ahead of the changes being implemented. So very forward thinking. And I think a lot of companies have done this. One of the reasons why GDP was negative in USA because of this very thing. A lot of imports coming in anticipation of tariffs. On the flip side of that, if we see an unwinding of those imports in the next quarter, does that mean that's going to be beneficial for GDP growth? Maybe. Anyway, this proactive approach ensures that sufficient pre-tariff inventory is currently on hand and will sustain operations through to the second quarter of financial year 26, allowing further time to plan. By the way, due to tariff situation and potential impact on consumer demand, again, some sort of negative commentary in regards to demand over there, consumer demand, and we've already seen some evidence that's really pulling back. USA sales expectations have been reduced for financial year 26. So I was listening to a podcast this morning, and it was an American podcast, and they were going through some data in regards to household spending plans, and households are really pulling back, particularly from big scale spending. So talking about cars or automobiles, TVs, that sort of thing. They're really pulling back, planning, buying any of that stuff over the next certain amount of time. Can't remember how long it was, but yeah, we are seeing a bit of a shift with consumer spending over there, and also for projection in their spending. And that's the point. That's the reason why uncertainty is so important. Because if you're uncertain about your job, you're not going to spend, are you? You're going to pull back from your spending, increase your saving or your cash, that sort of thing. Anyway, trade and consumer sentiment was already volatile in the USA, and this has been amplified over the past month and on an almost daily basis by the ongoing tariff announcements. In contrast, so there was actually some good news in this trading update. ANZ has continued to grow and is up 17% on previous corresponding period. So here it is. Yeah, ANZ up 17%, USA down 13%. Anyway, so City Chic share price down 5%. But again, I think this is another case where share price has collapsed over the last few years, 3 or 4 years, as high as $6 back in 2021. Now it's 7.9 cents. There's a chance this might turn around, but at this point in time, I'm not. It could turn around. At this point in time, I'll just be looking at the chart, and if I see any sort of positive sign in the chart, any sort of positive announcements from the company, that's when I'll jump in. Not now. Not now. It could go pear-shaped from here. Now on to Reliance Worldwide Corporation, coming in at number 2. Coming in number 2. And this company only down 1.9%. Not that bad. I thought it could have been worse. Trading update, and there's their Macquarie Conference presentation. Even though it doesn't start till tomorrow, they've released it today. So obviously they're getting ahead. I said that in a Kiwi accent, didn't I? Ahead. So even though they're participating in this Macquarie Conference, they sort of got ahead of their presentation and just put it out there. That's a pretty good idea. I really like this update from Reliance Worldwide Corporation. It really gives you insight into what these companies have to go through. It's astonishing. It just shows you that tariffs are just awful. They're really bad. So Reliance is working actively to mitigate the impact of recently introduced US tariffs on imports into the USA. They do have a significant manufacturing presence in the US. Approximately 48% of America's region's cost of goods sold are sourced outside the US and potentially subject to tariffs. So interesting word in there, potentially subject to tariffs. Again, uncertainty. This includes raw materials and components as well as finished goods, which is a lot of people don't realize. You can manufacture stuff in the USA, that's fine, but a lot of your imports, raw materials, come from outside the United States, and a lot of these imports and raw materials can't be sourced from the United States. And that means they're going to have tariffs on them. And this is the reason why there is a company, or has been companies, who actually move their operations, move their manufacturing from the United States overseas because of the tariffs on all these imports. Anyway, so key areas of tariff mitigation being pursued by the company: switching product sourcing from China to other countries, given the high level of tariffs now applying to China, looking at further cost reductions, implementing price increases in the US to mitigate the impact of tariffs. Now, there are some members of a Trump administration who say, well, there doesn't have to be increases in prices. Well, what do they think is going to happen when all these companies are paying significantly more for all these imports? Do you think they won't pass them off to the consumer? Of course they are. That's a natural thing to do. The company is moving quickly to further diversify product sourcing beyond China, including Vietnam, Taiwan, Korea, Thailand, and to own facilities in USA, UK, and Australia. While there is continuing uncertainty around future US tariff rates and the likelihood of new trade agreements, we just don't know, being successfully concluded between individual countries and the USA, the company believes that reducing its purchasing exposure to China is appropriate given prevailing relative tariff levels and the current geopolitical context. And they just keep on going on. So I think there's a really good announcement from Reliance Worldwide Corporation. 4-year trading outlook. This was a downgrade, but not a big downgrade, but it wasn't a downgrade. I'm trying to remember where the number, there it is. Expected to be, I remember it was a very small downgrade. So they had a range, and they're expecting now them to be towards the bottom of that range. Somewhere in here anyway. It's somewhere in there. Here we go. 4-year group external sales are now expected to be at the lower end of the guidance range of broadly flat, within a range of up or down by low single-digit percentage points. Okay, so yeah, so still within the range, but the lower end of the range. So in a way, that was a downgrade, but the share price isn't down all that much. So the whole reason I want to discuss Reliance worldwide is because I really like the announcement. Really like the commentary. Gives us insight to what's happening. Now to the chart for Reliance Worldwide Corporation. By the way, I'm going to open up the presentation. I had a quick look at their presentation. Very quick look because it's a presentation. I like pretty pictures and that sort of thing. I love presentations. If all, and by the way, Americans don't do this. American companies just don't like presentations for some reason. Oh, it's just annoying. They do release presentations, but nowhere near as much as Australian companies. What I'm going to look at here is this little slide. Excuse me. Just the sales here. Yeah, this one here. This company has grown significantly since they listed. So they listed, 2016, and nice growth in sales. But some of this has been achieved through acquisitions. So 8-year CAGR, 16% per year. I would have preferred sales per share or revenue per share because that takes out the acquisition component of their growth. So I just don't know how much of this growth is through acquisitions. But if you have a look at their chart, share price has dropped a fair bit over the last few weeks. I got into a little bit of a debate with someone when they released the results in August. I thought the company was a little bit overvalued, and this person said, no, it's not. And then share price went on a massive run. I was like, ooh. And the share price has dropped since then. Quite a bit, by the way. But in saying that, if you have a look at the weekly chart, it's not really the chart of high-quality companies. You can see a lot of volatility in there. If the share price drops below $3, I would become interested. I'm just going to say that. If the share price drops below $3, I'd become interested in this company. Okay, let's move on to the stock of the day, which is Westpac. Released their half-year results. Share price down 2.72%. Ooh, XJO is now down 0.93%. Wonder if the futures are dropping in the United States. Oh, no, they're not. It's just, something's on my roof. Probably a bird. Share price down 2.72%. Not surprised at all. Half-year result. By the way, I did bring up Westpac. Here it is. Yeah, so Westpac shares tumble on half-year profit miss. So let's have a look at their results. So I just looked at this one. So there's one thing I'm interested in that was not provided in this little table, and that's net interest margin. So profit down 1%, a net profit after tax down 1%. Why do they didn't need these two? They just could have had one. Return on tangible equity up a little bit, up to 11.1%. That's nice. CET1 level 2 cover ratio 12.2%, down 31 basis points. Earnings per share 101 cents. Don't really care on that. Flat. And interim dividend, don't really care about that either, 76 cents. I do care about net interest margin, and they do have it somewhere here. Where is it? Here it is, 1.8%, down 3 basis points. So I did actually ask ChatGPT because for some reason net interest margins isn't in, or I couldn't find it in FinChat. I just want to see what net interest margins are doing for Westpac. Is a trend down? And it is down over the last few years. So the trend is down for Westpac. I'm assuming it's down for most of the major banks, which is probably hinting at increased competition. And I'm pretty sure they mentioned that somewhere here. I'm pretty sure they mentioned increased competition, but I just don't know where they said that. Yeah, I'm pretty sure they mentioned increased competition, but where did they say? Oh, in fact, they said it in that commentary right here. Core net interest margins stable at 1.8%, but it was down. Flat on first half 2024, down 3 basis points on the second half 2024. So flat compared to last year, but down compared to the previous, not the previous corresponding period, the previous period. Anyway, persistent competition in lending and term deposits. And I think that competition will grow moving forward, which is one of the reasons why I'm not that interested in apart from them being overvalued, it's one of the reasons why I have no interest in the banks, because I don't see much growth for the banks moving forward. The other thing is reported net profit down 1% from a year ago, below 3.32 billion, below 3.43 billion expected by analysis. So this was a miss from Westpac. So that's another reason why the share price is down. It's a miss. Did they say anything about any sort of trading update? They do mention in this capital brief article, Westpac said margins remain steady despite persistent competition in lending deposits and flagged a 6% increase in operating expenses. And the CEO mentions we're managing margins actively in a competitive environment, achieving sustainable growth in our target areas. In particular, our focus on business and institutional is delivering results within Australia, which I actually think is a pretty good thing, focusing more on business institutions instead of loan or like mortgages. So I think that's a good thing because mortgage environment is so competitive right now. Okay, so let's have a look at the chart for Westpac. And, the chart looked pretty good. Daily chart looked good. I'm thinking it's starting to turn around. The uptrend has definitely come to an end. So we saw that uptrend through most of 2024. It's definitely coming to an end. Share price has rallied the last few weeks, but that's just been a silly rally. I'm not sure if I'd say Westpac is significantly overvalued like CBA, but P ratio 17.45. I'd say the price to book ratio is probably elevated as well. That P ratio is not the P ratio I would look at if I wanted to invest in Westpac. I'd need to see that below 10. Yes, below 10. Dividend yield, even that's 4.5%. It's not attractive enough for me. By the way, I'm paying my parents 5% for that bridge loan. 5% return is actually not that bad. So, anything above 5%. I was going to talk about one comment, but I'm going to leave that tomorrow because this video has gone out in 56 minutes. So I'm going to end it there because I am needed in 2 minutes. So if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, how was the webcam on the computer? Pretty good. It's really weird. I'm looking at my video and my face is well down. Anyway, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.